This is the talk of Music City Real Estate.
Welcome back to another episode of the Talk of Music City Real Estate.
Where we educate and motivate all things real estate.
My name is Monte Moore with Realty One Group Music City.
Hey, and I'm Carey Ann with CMG Financial and my mortgage team.
Every week we'll be posting a new episode chock full of Nashville real estate value.
Yes, and you can follow along and subscribe at talkmusiccity.com.
Got a question for us? Ask away at questions@talkmusiccity.com. That's questions@talkmusiccity.com.
Ho, ho, ho.
Hey, hey, hey. And we have Mr.
Season.
Jason Hoover in the house as well. Thank you, Jason, for being here. It's always good to see your smile, brother.
I'm glad y'all keep opening the door for me.
Yes,
absolutely.
You've been part of the family now for so long.
So, guys, imagine this. Imagine this. An agent was telling me the other day, they've been playing Pop-Tart for this client of theirs, okay, $300,000 home, looking for in that range. And every time one hits the market, they race out to it,
sure.
and they get beat out and that kind of thing. Well, finally, this one, though, is perfect, okay? It's perfect. The agent has confirmed it's still available. En route, he pulls it up and looks at the listing details a little bit more than what he had. And it says, guess what it says on commission dollars being paid to the buyer's agent? $1.
No.
$1.
That was a misprint, right?
That's what he was hoping for.
$1, Bob.
No, $1. So,
that's on the bucket list.
but here's what just came out as well on Inman, and that is how to handle buyer's agent's commissions when the seller won't pay. Okay, this is on Inman News. We all know that's one of the major resources out there. We're going to get into this in a minute. Let's talk about our sponsor first.
Yes, we're so thankful for our sponsor, Music City Removal. They are the #1 junk removal service in Nashville from residential, commercial, and construction. They're experts in ridding you of junk. Their costs include labor and dumping fees without any hidden or added expenses. Whether you need a full clean out or just one item removed, they have you covered.
The Music City Removal team knows the importance of respect and trust while in someone else's home. They understand the inconvenience of junk left behind by previous homeowners and tenants and are determined to provide an affordable and customer-focused junk removal service that puts you first. For a free on-site estimate, go to musiccityremoval.com. That's musiccityremoval.com.
Yes, Music City Removal, because clutter ain't cute.
Because clutter ain't cute.
Nor is not paying a real estate commission.
Oh, man, you're working your butt off, and you finally get for $1. What do you do, Jason Hoover? What do you do in that situation? This is real. You know that, right, Jason?
Oh, yeah.
I mean,
it's definitely real. And we've been seeing this occur, trimming it down and over and over, for the last couple of years, more than that, actually. And two, even with new builds, we've been seeing, some of
the builders now are going to one local builder, won't mention the name, starts with an R, was going with 1%, and now I understand they're offering basically a flat fee.
Are they really?
Yes.
Oh, really?
I remember, they went down to 2 and then to 1. So now they're
basically a flat fee, and it works about to 1%. So that's one of the reasons why, a few weeks ago, we talked about commission compression because of the iBuyers and all that kind of thing happening. And again, that was Inman News. And this one, though, talking about how to handle buyers' agent commissions when sellers won't pay. I think this is the topic, guys, I think everybody needs to pay attention to. We really do. I know in our organization, we're really trying to prepare our agents to have the mindset, what are you going to do? Don't wait until you get there. It's going to happen.
Right.
And if you show enough property, you're going to run across that perfect home for those clients of yours that is not offering what you wish that they were. And, we all know that commissions are negotiable. Nobody's talking about anything being fixed here. I just want to clarify that for the record. There's nothing like that happening here, but there is, a range, okay? Because we know our value. Yeah. We know how stinking hard we work sometimes. Yes, there are times where it looks like we got overpaid based on the amount of time, but what the client and what everybody else doesn't know is all those other times where we worked so hard and didn't get a penny for it. Okay, know how it works the same way in your industry, Carey Ann. How many loans have you worked, all night long on and all this kind of stuff, and then the deal fell apart, or they changed their mind, or they went out and bought a new Mercedes yesterday, or whatever.
Right. Yeah.
Or they go with somebody else.
Yeah, or go with somebody else because somebody else offered 1/8 of a point less.
I know.
Yeah.
I know.
And you don't
Does that
get
ever happen?
paid a single penny.
No, you don't get anything
Nothing.
for that.
So we don't, they don't talk about that.
No.
Those that we run into.
Exactly. I mean, I've been, as you know, in this thing for 37 years, and I know that it all works out, okay? I know that you earn every dollar you make. If you stay in this long enough, you'll earn every dollar you make. You might get an easy once in a while. If you do get an easy one, hang on to your shorts and anything else.
Something's going to happen, right? Yeah.
Right.
Nothing's ever easy in this industry, for sure.
Well,
for
here's
sure.
the thing, and this is what we teach our agents is you've got to be proactive.
Right.
You cannot be reactive. No. And I think that's going to be the problem with a lot of these agents because guess what? This is coming. And
it's here in some measure. It's
right.
here, but it absolutely is coming.
That's why we've been talking about it already. It's coming. It's here. So we've got to prepare of how to handle that. Don't be reactive and try to do it on the back end. Like, oh shoot, what do I do now? Right. And walk away with the dollar. What do you do?
One of the responses I heard from one agent when I first brought this up, I brought this topic up about a year ago at a meeting. I don't know if you recall that or not, but one of the agents said, well, I'm just not going to show that house. I'll teach him. I'll teach them. I'm just not going to show that house.
I don't think you can do that, huh?
No.
Well, and that's one approach, but, more importantly, whether that's even ethical or not is the importance of, let's imagine for a second that you have been working and building this relationship. Because remember, guys, this isn't about selling homes. This is about building relationships,
sure, yeah.
Okay, in our business. And you've been building this relationship. You've been doing all your parts. You've been Johnny on the spot. You've been communicating. You've been following through. You've been making sure that they were getting the properties that they wanted, and so forth. And now, because the home they want to buy is not offering what you would like to be paid, and you, in this case, I'm using this example because this is true, you have failed to prepare or educate your buyer to how you get paid and what you are worth and have something signed with that clarity and that understanding is now that position that agent was taking was, well, I'm just not going to show that property. And so I'm just going to kick away all the work and all the, labor pains and so forth of that building that relationship and just kiss it goodbye. Now truly, we don't want to work for $1. I get that. But but your worst case scenario, your absolute worst case scenario is what if you did work for $1? What if you did continue to maintain integrity through that process? What if you did get them their dream home, and they knew that you got paid $1 because they didn't have the money? That's a whole other part we're going to get into here. They didn't have the money to make it up, and you couldn't bump up the price. You couldn't do the things that we're going to talk about that you can do in some cases. Are you really going to blow away that relationship, or are you going to honor it and then trust that they're going to feel something in their heart to make sure they give back in some way or form or another? I mean, that law of reciprocity, we got to remember that. If we give, we're going to get. I mean, it's just a law. It has to happen. It may not happen as quickly and we want to, and that's not why we're doing it, but it's a law. That law of reciprocity, because we've given so much and they know that. So that's my belief is, okay, I read a Dale Carnegie book years ago, Stop Worrying, and I forget what it's now, Stop Worrying and Start Living, whatever it was, but one of the things he addresses right in the beginning of that book is, what's your worst case scenario? Your worst case scenario in that situation is you're going to work your butt off and you're going to get $1. Okay, can we live through that? Can we survive that? How many times have you worked really, really hard, Carey Ann, for somebody only to then transfer them to another company because what they needed, it was better served somewhere else?
Oh, yeah,
I know you've
for sure.
done that.
Yeah,
I've seen you
absolutely.
do that,
Yeah, and we become the liaison and don't make any money, in that.
But does it come back around?
Oh, yeah, multiple times. I think back so many years ago, the amount as a mortgage, so I manage and operate my own office. So what you make for a commission on the loan is a little different than what the loan officer gets paid, right? But there was a couple years back, we had a lot of compression on the margin, right?
Yeah,
so what we used to make on a loan compressed. Okay. So I was freaking out because you could be a very profitable, as in you could, not worry about the bills. You knew you could hit so many families served, and you could, work and do well and have a roof over your head from a rental standpoint. But all of a sudden the margins compressed. So I only had two options. I had to go I couldn't change the compression. I mean, the margin. So I had to do more loans. So I had to work more to make the same, and so that's kind of where we are at. I went through this situation going, okay, if I'm only going to make so much per loan and I had to pay processor this, underwriter that, and all this money out, I had to then say, okay, now I have to, instead of doing 2, I'm going to have to do 6, transactions times however many for the same dollar, figure. So it was an interesting things a couple years ago. So it sounds like you guys were kind of heading, moving in that direction now.
We could learn a lot from the mortgage industry, I'm sure. So what is
here's the thing. She's still here.
Yeah.
And she's still a rock star.
Well, she chose to be, because she had to do a mindset. I mean, I did a quick video the other day and say, okay, with this commission compression on that topic, what do we do? Do we, sell our house and buy a smaller one? I don't think you did that. Do we drive well, how old was your old Chevy? Without getting a new one? No, you got a new one too. But my point is, we have a choice of either shrinking or contracting in the mind of our mindset in the way of what we're committed to, and say, okay, I have a choice. I can shrink or I can grow, and I like growing better.
I think there's, in the mortgage world, you have brokers and you have lenders, right? Some lenders make a commission, which usually ranges between 90 and 130 basis points, let's say. Okay. So,
which means
0.9 to 1.3%, right, of the commission percentage wise. But brokers, you'll find, are at 1.7 to 2 point whatever percent, which means there's more money because they're brokering out the loan, right? So if you were born on that side of the fence, you are making a lot more. You don't have to do as many transactions to make a lot of money, right? So I was really blessed never to be born on that side, because I was always so used to having to help many families to make the dollar, right? And so when that compressed, if I was going to continue to lead the ship and make sure I didn't have to let anybody go, you just have to continue to work and help many, many more families, and that's what we did. But I think that's what you're struggling with now, on the sense of, I would much rather help everybody that crosses my desk, whether I make sometimes, I mean, if you think about it, if it's 1% of 100,000, that's, what it is, right? I mean, it's worth helping somebody for sure compared to the other. But sometimes the amount of money that you're making per transaction may not be maybe your per hour sometimes, but you do it because it's the right thing to do for the client,
Well, let me say this, from a mortgage broker standpoint, or a mortgage, what were the two comparisons?
I just say lender.
A lender and a mortgage broker. Okay. So let me just say this on the mortgage broker situation. Okay. Because I've had experience with both, obviously. The lender being you, and for a few minutes with a broker. And what I learned in that experience with a broker, though that looks like they can be more competitive because they have a bigger margin to mess with, what they absolutely lack is they're brokering out to multiple entities, okay? And so nothing is consistent, and they never become really proficient about the interaction with those people who make those decisions, okay? With those leaders of those other organizations. So it becomes far more costly to you in the way of anxiety and pain and suffering and additional and duplicated paperwork instead of going with a lender who you've got a package deal, I guess is what I'm trying to say. Right?
Well, I feel like you gain more control. Like if I was to hand off the baton, I'm like, hey, I hope it gets there.
Yeah,
and
that's what
wish
happens.
It does, right?
And that's what
right.
happens.
And that's sometimes what ends up happening with the brokers. And there's some great brokers out there that may have been doing it long enough that they have that relationship, et cetera. But I don't know.
Carey Ann always trying to bring
any that time it's third party, I have anxiety. I mean, as USDA or THDA, even those types of loans, if you think about it, they're third party.
Yeah.
If they choose to not want to work the Wednesday before Thanksgiving, now all of a sudden we're pushed out so many more days, and that's kind of the situation that we're dealing with. But let's talk about, because I think of myself as somebody who would like to purchase real estate again in the future, right? And so we get into that rhythm of, okay, I don't have to write a check to the lender because it's in the cost of the loan somewhere. I don't have to write a check to you as the agent. And even on the seller side, I really don't have to write a check because it's just coming out of the sky money, right? Like there's money somewhere, you know what I'm saying? Like it's just it's just in there. So what are we going to do if are we actually writing checks? What's happening?
Let's break this down on all aspects of it. I know Jason and I have talked about this before because you know, we already know that if you're working with an FHA buyer, no offense to any FHA buyers or VA buyer, anybody who was working off a tight margin.
I help many, and they're all amazing.
They're all amazing, absolutely. I love first-time buyers. But let's face it, a lot of times they need help with the closing costs,
Right.
let alone that we're going to come along and say, and we want what? I mean, think about how many people are now potentially, if this, you know, really does become a common thing, and it's already happening. So I know it's not in the article. It says it's not if, it's just when is it going to be, you know, really well known. Because keep in mind here, guys. Let's just backpedal just a minute here. I shared this yesterday, but how did this happen? It happened because some consumers, one set in Chicago, another in Florida, and anyhow around the country, filed a class action lawsuit, and they went with the attorney group that actually fought with the tobacco companies years ago. Okay. Same group, and won. Okay, that's pretty big. That's a pretty powerful organization. Okay, it's going to win against the tobacco companies. So my point is, when this was approached, when our approach was approached by this, is obviously okay. They're serious about this, and so what it was about was, as a seller, should I feel okay about paying the opposition's fees? The opposition being, you know, we know that though we'd rather not get into opposing positions, a lot of times from the seller standpoint, I'm sure it feels that way. Mm-hmm. The buyer's trying to not pay any more than they have to. The seller wants to get as much as they can. And a lot of times, neither party are absolutely happy about it. But as the seller, would you want to pay for your opposing partner's representation?
Sure.
It doesn't always feel right, you know. No. If you think about it, it's like, okay, I get that. And so that's when they're trying to change that so that the agent working with the buyer, or the buyer working with the agent to buy, has to pay that real estate commission in theory anyhow right now, okay? So that's what we're talking about here as far as how do we get over that? How do we get around it? How do we get through it? How do we continue to help our clients and still stay in business? Because I don't know about you, it wouldn't take very many of those $1 ones to kind of tell me I need to go find something else to do. I mean, if it was a lot of them in a row.
And so on that topic, and you know, this is where I'm kind of stumped, because it's my understanding that you're negotiating your fee as the listing agent. Mm-hmm. So let's say it is, y'all negotiate a 6%. That 6% is what I have negotiated. Right. And then I'm also agreeing as part of, I'm giving part of that away. Right. If somebody brings a buyer, but right. In the end, it's my commission that I have negotiated that you're paying me directly. Mm-hmm. And I am willing to provide part of that for somebody to come along. If they don't, then, you know, it could be. Then you get the full 6. I get the full 6. Right. So that's where my problem lies is it the people selling the house, are they really paying the buyer, or is it they're still paying the listing agent? It's just the listing agent, it's part of a marketing. Saying,
what do you think? Hey, what do you think?
Yeah, I know. You know, I think it's really could be argued either way. Is the buyer paying the commission? Because you could argue that, hey, I'm offering, because just to be transparent, when I moved up here from Florida, I had an addendum down there where I was actually getting more than what some would call a common. I was actually asking for 6.5% commission, and in my addendum it stated that my buyer understood I was requesting 3.5%, and in that offer included that amount of money. They were offering an offer that included what they were paying me. Mm-hmm. Okay, and when I got to Tennessee and said, "Hey, this is what I want to do. I want to, get more from that I feel like I'm worth more, because I've got 37 years in this thing. I've sold thousands of homes. I should be worth more than the brand new person off the street who has never sold a home." I mean, doesn't that make sense? Anyway, they didn't buy it that. The attorney I talked to said,
no harm in asking or trying, right?
The attorney I talked to said, "I'm sorry, we don't do it that way in Tennessee." But the point is, just like what you're saying there, Jason, is that is supposed to be baked into the deal. Because I'm telling you this is my concern, and I think we've danced around it, obviously, is if it can't be baked into the offer, mm-hmm. into that other commission that listing agent has negotiated, then I don't see half the buyers being able to buy, or right. Certainly not without representation. Okay, they're not going to get somebody that's any good at what they do without some sort of compensation, it just doesn't work that way. You know.
So when you're taking an application for a client, right, you ask where they've lived, their social, their birth date, you go down where they work, and then you get to the asset section. So let's talk about your checking and savings. How much do you have in your checking, right, or your savings? And they, no joke, always come back and say, I'm sorry, what's the question? Right? And then they say, and I said, oh, checking, is that money in, money out for bills and such? As in, everybody wants to skate around telling me how much they have in their checking. Because multiple people don't. It's such a large percentage of people that have very minimal money in their checking account. It's money in, money out, paycheck to paycheck, especially this year, right, with COVID. So then savings comes around and they may have 1,000 or this, and it does not matter what car you drive out there in the driveway. It is the exact same scenario. The percentages of people that have the extra money in their savings, just sitting in a savings to be able to use is not as many as you would think, you know? And so when I hear that, we're going to ask that FHA buyer to cover a percentage, you know, of closing costs, I said, we're
even
counting pennies.
Even 1%.
We're counting pennies for our down payment right now, and or trying to get a gift here or there. And oh, by the way, don't deposit your cash tips from your current job that you have, because that is now considered a large deposit, and now I can't use it, you know, and for documentation purposes. So if we're already trying to count that for down payment, it's going to be a lot harder for, you know, the commission piece.
It is.
For sure.
In Inman's article here, they've got a couple of different approaches I want to cover real quickly here for the listeners. Again, guys, you know, if you're a realtor and listening to this, I think it's really important for you to have in your mind, what are you going to do in that situation? Because it's going to happen. If you show very many homes, it's going to happen. And so are you going to say, well, I'm just not going to show those homes? That's not going to work good, I don't think. I would try a different approach.
Well, and you got to also remember the value of a customer long term.
Absolutely. That's exactly right. That value isn't just how often they sell or buy. It's what else can they. Again, we talked about reciprocal reaction there. So, and the other, so anyway, I lost my train of thought.
So let's say the price. So let's say I want to put an offer in, right? And we already are moved in the direction of it's not customary now that the seller pays the commission. But I could easily ask, at this price home, I'm offering to pay this price home for you to cover my closing costs, my real estate commission.
Right.
I could ask that, right? I could negotiate that in the price, right? So would that be considered maybe a price approach?
Well, that's one of the suggestions in here is, you know, say the house is $300,000 and you come in and say, okay, we're offering $309,000, which includes the buyer's side, the selling agent's part of the commission. Problem is, well, you know, some of the loans, you know, you can only ask for so much in concessions. Also, will the house even appraise at that much?
Sure.
So there's some other repercussions that are going to happen from this, and that's what is the unknown.
And the other part is the uncomfortable conversation with that buyer who is saying, $9,000. Well, I mean, what are you going to be doing for me for $9,000? Because they don't know what all we do for them. You know, they don't have any idea how hard it was to get us to this point where we are efficient and proficient in the topic. You know,
and that's why I'm wondering if this is going to kind of go to the same path as the flat fee listings. If there's going to be flat fee buyer representations.
That's what I'm concerned about. I mean, because it's going to be one thing for somebody to come up with a couple $1,000s more versus what we would typically see as an accomplishment, you know. I mean, you know, I'm embracing the experience because, you know, after being in here 37 years, you realize that only the strong remain, okay? And things happen out there in the marketplace that cause those that aren't really serious, that it's just what is the example you use? Are you serious about this, or are you just...
Are you committed, or are you just interested?
Are you committed or interested? And I think you're going to see that narrowed down. Are you really committed to this as a career, or are you just interested in it because you've been watching Property Brothers or something?
Right.
Yeah. Do you want to work hard? You know, and not saying we don't work hard. I get that, but we actually... if they're going to cut our commission, we're going to have to work double, right? I mean, that's just how it is to make the same amount. So we're going to have to work harder in our profession.
So one of the options they used was the price approach by raising the price. And again, we all know, if we were experienced, that, okay, that it might be cool if we're not in Nashville where we're already leaning on values, because we've already known, I know you've seen a few short appraisals.
Yeah, 3 or 4 this week, actually.
Wow.
Yeah.
I mean, that's so common, you know, that the buyer or the seller prices are already pushing the possible
Well, it's
limit.
hard too. New construction with the cost of lumber has gone up, but the comps
I
are
know.
not following suit.
Well, I think what I was disclosed the other day with a builder told me that it's funny how one region, the price of lumber and things will be one price, but here in a hot area, it's totally another. As an example,
That sounds fair.
he has a good friend in Hawaii, and the Hawaii market is not that strong wherever that person's at, and he's paying identical amount for a board. How's that possible?
Right.
Here in Tennessee, where it only came from probably 100 miles versus Hawaii, where it
Right. I was
came
going to
a lot
say, did they
farther.
cut off the tree there, the
Probably
palm tree?
not, palm tree. But let's talk about another approach, Carey Ann, which brings your expertise into the picture. Let's say that interest rates are one number and you can actually buy the rate up. We've talked about buying the rate down because there can be some cash, or used to be, some cash available if you bought the rate up. Let's talk about that.
Yeah, actually, before COVID, there was an option where you could talk to the lender about, raising the interest rate and covering cost. And it used to be maybe it was an eighth or a quarter or, 3/8 that you could get a decent amount of money towards your closing costs. But now with the government types of loans really out there in the marketplace, not being able to sell for what they used to sell, you'll find right now that there's very few opportunities where you can raise the interest rate. And if you are raising the rate, you're having to raise it so much where, let's say the going interest rate on a government loan is 2.5, or even lower. I think I locked somebody in even lower than that still, right? But that interest rate costs the lender percentage normally. Now they can charge that back to the buyer. They can eat that. But I could go from 2.5 to 3.5 for this to be the same cost. I would have to get way over 4% sometimes to even it to be crediting back a rebate of some sort. And that rebate may not be even enough depending on the price point, because again, it's percentage driven, to even cover what they would consider a percentage high enough to help with the commission. So that's something to think about. What used to be is not today. When our numbers are compressed, that option kind of gets thrown out the window, as well.
Interesting. So Jason, let's talk about equipping the agents with a conversation. Okay. Can we, I know you've done that more than once, and I know you've talked to and helped our team here at Realty One Group Music City with the concept. So let's talk about that. I mean, I think that obviously becomes paramount now, because I know a lot of agents never talk about what their value is.
Right.
Even they skate over it, even on the buyer's representation.
Yes.
They skate over it because it's kind of been built in. It's been baked into the bread,
Yep.
And now suddenly it may not be. So the best defense is always a better offense, and to be more proactive. And again, that's why we're talking about this, to help our agents, our agents, and those watching. How can I be mindful of this? How can this not throw me off? How can I maintain my integrity with my buyer that I worked so hard for, only to find out there's only $10 at the end of the rainbow, or whatever that situation is? How do I do that? So again, I think being proactive is. So let's talk about that.
Right. And I think, that is the key, is being proactive and setting that expectation up front, and spending time on that buyer representation agreement. It is even more important going this route to have that buyer rep beforehand.
Absolutely.
We preach it every day and all day long. And, I think it's going to be more imperative for agents to get that on the front end because of being able to discuss the commission. And in there, it talks about that, this is my commission rate that, and you fill that in, that I will be paid. If for some reason that property, if that owner is not providing X amount of commission, then that's basically coming from you. Okay. So, and the way you can tell them about it, it's like, for like a FSBO, for sale by owner, hey, I don't want you to miss out on that perfect house. So I'm going to be searching for sale by owners. I'm going to be going out and canvassing neighborhoods that you enjoy. And, sometimes they are not willing to pay my part of the commission. And in that case, I just want you to know and be aware that we're going to have to make an offer based upon what my commission would be. And for that house. So you're just setting that expectation. It's just like a listing appointment. You're establishing your value.
But that's the key part right there, Jason. I hate to interrupt you. I'm sorry.
You're good.
But establishing your value. Where does that start? That starts in here.
Yeah.
Okay. Because you've got to.
Here and
you've got to. If you're going to give somebody the message, you've heard me say it many times. Before the message matters, people have to believe the messenger. You have to believe in your value.
You do.
And that means you're bringing value to the table and not just hanging on for dear life.
You're not a door opener anymore.
No.
Yeah.
That's where you shift from being an agent to a professional.
Is that where you bring out the document and you go over all the, I would think if I was doing that, I would roll out
on the front end.
Here's what we're going to go over and this is what it includes.
So many agents are scared to go over that and get a buyer's rep agreement because they're scared of being rejected. Well,
that part, but also I think the conviction here.
Yeah.
I don't have a problem sharing somebody my value because I believe my value.
Right.
If anything, my value is more than what I'm charging. I'm going to give you a discount today because I'm only going to charge X number,
Right.
Well, you think so many, look at Kohl's. I love Kohl's. Aubrey, about every outfit there was in Kohl's growing up. But if you think about the Kohl's shopping experience, right? Every single kiosk tells me that I'm getting something at a discount. But really, they're basically telling me what, they're providing me, what the price was, and then they're giving me this deal. But this is all that I'm getting. Literally, they list all the things that, I get within that good or whatever.
Do they still use the marker and highlight how much you save?
Yeah, but it's the whole feel, right? Like you feel like you're getting more. At the end of it, possibly it's all the same number.
You're getting that higher, it's perceived value.
Yeah, that's what it is. Yeah.
Jason, what does it say on your business card to expect?
Expect excellence.
See that? I love that.
I
love that because if you're sharing that on the front end of that relationship and you're backing it up throughout the relationship, then the number you put on that agreement, assuming they can afford it, that's the tricky part. But you've had the conversation on the front end, is my point. Because I'm concerned until people find themselves down that dark alley. Well, it seems like no way to get back out. It's like, what the hell? I thought, some of these new agents are not going to be knowing this information. They're going to find themselves in that scenario and not knowing how to get out of it. Where do they go?
Right.
And get mad.
Yeah.
But getting mad isn't the answer. Being educated is, and being proactive is, like we're talking about today.
And so if they're not proactive, it's just a very strong dose of reality.
And a lesson, hopefully, that you only have to learn once, to be more proactive in the future. But
and maybe too, and I know we could keep talking forever, but maybe there's a different thought process at different price points. Like 200 versus 400 versus 700 versus $1.5 million, $2.5 million, right? When you get into the higher price points, 3% of $1 million, we're at 30,000, right? Now we're at 2 million, 2 times 60,000. When you're saying I have to write you a $30,000 check, right? Whether you can afford it or not, that's a car, right? Like you kind of put yourself in some different perspective. So I can see that being a little more unique, where possibly the same concept of a car would be $2,500, for somebody else. I get that, but it's a little easier to maybe roll in $2,500 than possibly $30,000.
Yeah, but
right?
a $2 million home. Are they buying a $30,000 vase? You don't know what they value, and that's where we're talking about. Bring your value,
and how important it is to have that outstanding representation. I think in that scenario, people have to stay in their lanes.
Right.
Yeah. You're not going to be able to share that conviction on that $30,000 level, unless you got the $30,000 goods.
Right.
For most people, because most people that are buying a $2 million home or $1 million home, they're probably going to be a little more experienced and say, I'm not sure that you're bringing it. Tell me why.
And that's why it goes back to being that professional. Have a sit-down discussion with the buyers before you go out and start opening up doors. And that is your time to show and represent yourself as a professional over just any agent.
If they don't see it and they're not willing to, be willing to accommodate your efforts, is that really a win-win relationship? It's not. It's not. It's time to.
And you know what? If they're not good with that, then this may not be a good fit.
That's right.
Right, and that's the ultimate decision, right? Maybe it's not a good fit because you have to fight so much to prove your value. They don't see it.
It's better to find that on the front end,
right,
than a month down the road.
Right, time is money for sure.
Exactly.
Right, exactly.
Yeah, the other day I was interviewing a new agent. He's been in business 3 months and he sold one house and he also has a full-time job working at a restaurant. Sweetheart of a guy, but he said, "Well, so what are you going to do? What are you going to do to convince me to come to work for you?" And I said, "I'm sorry. First of all, how many homes have you sold? You've sold one home. Okay, that's cool. Congratulations. It's not easy out there. But here's my deal. I'm not going to try to convince you to do anything. Here's what I want you to do. I want you to listen to your heart. We just talked to you about you make 100% commission here once you're experienced. We just talked about tools, training, technology that is nobody can rival, nobody can touch. We talked about full service. We've talked about a mentorship program that the mentors are required to be mentored. We talked about all of this, and now you're going to have the I want to call it confidence, but I don't know that it's confidence, to ask me what I'm going to do to convince you to come to. Here's what I'm going to do. I'm going to do nothing, man. I'm going to do absolutely nothing and wish you well. But anyway, guys, it's been awesome as usual.
It's always so good to see you. Thank you so
awesome.
much, everybody, for joining in. It's always great having you. We can't wait for you to come back. You've been listening to The Talk of Music City Real Estate.